AI-led enterprise transformation company Cartech has raised $11 million in its Series B primary funding round that was led by Playbook Partners. Now, this fresh capital infusion is going to be directed towards strategic acquisitions, strengthening the company's AI-led enterprise operating system platform, enhance global delivery scale, and strengthen their go-to-market efforts. For more on the funding and the way ahead, joining me now is Maran Nagarajan, the CEO of Cartech, who is here with us. And, we'll try and see if we can also connect with their investors. But Maran, first to you, 1,000+ crores of revenue, 45% kind of a compounded growth. What's driving that? And what is the next leg of growth in this, now that you've raised this money? And how different is the company going to look over the next 2 to 3 years?
Hey, thank you so much for inviting us. And it's a pleasure to be connecting. And the growth has been largely led by the tailwinds that we had in the digital transformation happening in the space of the SAP. And thanks to the expansion we had from North America and also the European markets. So that is the reason for the 45% growth over the last 6 years. And coming back to the fund that we have raised, we intend to build our platform, the enterprise operating system. So the history has always been about the ERP transformation journeys that Cartech led. And now we are also in the forefront of the AI transformation happening in the organizations, where the new genre getting created called as enterprise operating system, which we will be building a platform as well. And this capital raise would go towards that. And we are extremely optimistic about the future growth as well. And we believe and we intend to grow in the 30% growth zone, but we will be putting more energy towards our profitability going forward. Over to you.
All right. We also have Vikas Chaudhary, founding partner at Playbook Partners, who is joining us now. Vikas, you've signed the checkbook for CAR. What stood out in their model that made you do it? If you could begin by telling us about that and the kind of conviction bet you've made in this particular investment.
Yeah, thanks for having us on today. What we saw was a structural shift in the technology landscape globally, which is quite obvious to everybody here, that there is a huge migration led by the AI wave of enterprise customers migrating their entire data, applications, and infrastructure to the cloud so that it can become AI ready for the future. And that is what Cartech exactly does, where it takes a company on the enterprise side, billion-dollar plus organizations globally, to migrate their entire stack to the cloud. And that digital transformation, over the next 5 years, has over $1 trillion opportunity in the world that we see Cartech being a major player in.
Maran, you also said some of the capital that you raised is going to go into acquisitions, data engineering space and analytics. Do you already have something on the table? What kind of targets are you looking to acquire? And overall, how critical will this M&A inorganic route be for your strategy to stay competitive in this, AI space?
Oh, yeah. We are looking at an acquisition in the space of the data. And yes, we have a couple of shortlists, but it's a little bit too early to talk about that. And most likely it would be in the North American geography and on the horizontals of data space. And it is very critical for us and the growth forward and the growing forward. And this would accelerate our growth as well. And this will also add a lot of capability to our delivery to our existing enterprise customers as well. So it is very critical to our future journey.
But Maran, while you're not disclosing names, how quickly will we hear from you? And what is the size of these acquisitions you're eyeing?
In terms of the revenue points, we are expecting to add maybe 25 to 30 million in terms of our revenue point. But as I said, anywhere from within now till the next 6 months, we are looking to consummate a transaction.
Okay, so within the next 6 months. Because, from an investor lens again, How do you evaluate this M&A risk that's going to come up in the next 6 months, Maran says, in services-led companies that are transitioning into AI platforms? And what gives you the comfort that integration is going to create value and not really add to the complexity?
We've been down this journey on both sides of the table for many decades now. In my previous roles, running tech organizations globally and in India. And we have benefited from several M&As that we have acquired companies in the past. Even in my current portfolio as an investor, we've invested in Capillary Technologies earlier that went public as well, and they've had over 4 M&A acquisitions that have almost doubled the revenue of the company, over the last couple of years. So yes, of course, there's always risk in M&A acquisitions, but where there's no pain, there's no gain. So there's always, in the technology landscape, you have to be dynamic. You have to acquire skills and platforms that are early in the evolution, of the landscape, and be able to use those to cross-sell to existing customers and therefore land new customers. And I think the whole wave of now Indian companies, having global presence, global acquisitions that bring in large enterprise Fortune 500 kind of customers is going to be a huge opportunity for India tech going forward.
Okay, no pain, no gain. So maybe a little bit of pain when you start the integration process. But Maran, just to come back to you, on these IPO ambitions that you have, firstly, which market are you looking to list in? And also, how long would that whole process be? What milestones will you have to hit before going public? And what is the timeline we should keep in mind?
Thank you. We are looking to list in Indian markets only because we are headquartered in India and it's the easiest for us. And listing again in NASDAQ is going to be very expensive. And also, it is not so friendly for the companies headquartered in India, number one. And second thing, we are looking at to do the listing, file the DRHP anywhere by June 2027. That's our expectation. And we intend to cross the milestone of, let's say, 100 crore plus EBITDA by this year. That is FY27. We intend to hit 100 crore plus EBITDA. So that should position us for a very good IPO in the next year, next financial year. Oh, sorry, FY28 financial year.
Okay, Vikas, finally, to close this, what we've been seeing is a surge in these AI transformation narratives. As an investor, when you look at these investments, how do you separate the real capability from, buzzwords?
Well, it's three-pronged. There is a platform that you actually look at, which has been in use for several years now. And AI is really a horizontal layer. It's effectively empowering, automating, and making platforms more efficient, which Kartek here has been doing for a while. So we've been able to look and validate that. The second is, they are actually in production with customers who are paying millions of dollars of contracts using this for large enterprise installations and transformations. To pass the test with these large organizations is the real metal. And then finally, looking at profitability, which means that the pricing is market centric, it's competitive, and it is still profitable as per their tech peers in the market. So it's a very real business. I think AI is just an enabler that's going to accelerate the pace of growth. And because the end customers are going to need to accelerate their transformation, Kartek is going to benefit from a huge tailwind over the next 5 years.
All right, we'll leave it at that. Maran and Vikas, both of you, thanks very much for joining us here on Startup Street. It was a pleasure speaking with you.